In talking about tax planning, we can't ignore something called required minimum distributions for those people who reach age 70 and a half or otherwise might be required to take a distribution from a retirement account because of an inheritance. So required minimum distribution is something that the IRS says once you retire and you reach age 70 and a half, they're going to require you to take a minimum amount out based on your life expectancy and based on the 12/31 balance of the prior year of your retirement account. Now, there are various kinds of retirement accounts. We have 401ks, 403bs, and we have IRAs, rollover IRAs. The IRS deems IRAs to be all one account no matter how many accounts you have. 401ks and 403bs are considered separately. So if you have a required minimum distribution and you have multiple accounts, you have to make sure that you're calculating your required minimum distribution for those types. So we will have a required minimum distribution for our IRA total, and you can take it out of any one account or each of the accounts as long as you take out the required amount on that total IRA balance. But the 401k accounts, if you do at that time still have a separate account, would have to be calculated separately. And again, that's based on your life expectancy, and the IRS provides those tables to us. So at age 70 and a half is your first required minimum distribution. Now the IRS gives us an option. In that first year we reach age 70 and a half, we can take it out then, or they give us until April 1st of the year following the year we reach age 70 and a half. It gets a little crazy. The trouble is that some people don't realize, they think, oh, I'll just wait till April 1st of that year following, but then the IRS tells us we have to take two. So that's why we want to be careful in our tax planning and understand the implications of when we're taking our required minimum distribution. It may be to your advantage to wait until April 1st and take two in that next year. But quite often, that would be a really big hit on our income tax return. It all depends on your circumstances. So that's something we really would have to look at. Now, the other thing that happens, though, at age 70 and a half is the IRS also allows us to do something called a qualified charitable distribution. So if you're charitably inclined, we can also use your required minimum distribution to fund some of your charitable giving, and then we don't have to recognize that in our income. It's quite powerful, and it's a great tax strategy to use. So again, tax planning around these events is very, very important. Now, you heard me mention at the beginning of this that there could be a required minimum distribution if you have inherited a retirement account. So it's not everyone waiting till age 70 and a half. You might have a 14-year-old grandchild who would have a required minimum distribution. And quite often there are times where people don't realize this requirement, and if you miss taking your required minimum distribution, you could have a 50% penalty. Yes, a 50% penalty on not taking that required minimum distribution. The IRS is understanding of this. If you catch it in time and you take care of it and resolve it, they can be pretty understanding, but it is something that you have to be attuned to. So if you are someone who has inherited retirement accounts, you have to be aware that you will have a required minimum distribution based on your life expectancy, and you have to take that required minimum distribution the year after the person has died. Also, if the decedent did not take their required minimum distribution because they were age 70 and a half, then you as the beneficiary are going to be required to take that person's required minimum distribution as well. So again, lots of planning, which could have lots of implications, but it's important to talk to your financial advisor and tax preparer to make sure that you're taking advantage of all the strategies that you may be able to use and that you're not subjecting yourself to any penalties for not taking out your required minimum distribution.